Good morning, good afternoon, good evening, and welcome to the TGI. Thank God it's Friday, the 29th of April webinar here, the Bull versus Bear webinar with Steve Marty on the call for trade day. So welcome everyone. We're going to go through our usual run through in here today. We'll look at the main macroeconomic and fundamental events, geopolitical events that are shaping markets right here, right now. We'll take a look at the calendar, both the macro, fundamental calendar, macro calendar, data calendar, and also the earnings calendar, see what we've got coming up in the session, and then we'll also take a look at some charts. So let's wind back about 12 hours, a little more than 12 hours. So markets had a very strong recovery rally led by tech yesterday. I've been looking for this bottom to try and go in over the last few days, and the market's been extremely volatile. I do appreciate it's probably tricky trading conditions out there for you guys. A lot of volatility in here. Nasdaq's jumping around 3-4% on a day, but a really strong rebound, really strong recovery, but punctuated by some significant setbacks as well yesterday. But then after hours, we had Amazon and Apple reporting. Amazon's numbers really not great at all in here. Sold a big sell-off. Lost money during the first quarter. Sees another loss in the current period. And Apple, although the Apple numbers were good, so if we go and take a look at the earnings calendar in here for yesterday, where are we? In here, it doesn't like it when you open it in the new tab. Let me just click to yesterday. If we look at the earnings calendar for yesterday, see Apple beat on both. Amazon missed significantly on both and actually posted a loss. But Apple beat on both. But if we go back to 5 things in here, Apple did say there was some negatives in there as well from Apple, particularly that supply constraints with the China COVID restrictions would cost $4 billion to $8 billion in revenue during the current quarters. So even though they posted record results in here, the forward guidance from Apple was negative and Amazon posting a loss. Saw those individual stocks get crushed. Certainly Amazon got crushed after the bell. Apple initially jumped higher with I'm sure the algos picking up on the top line numbers, and then fell back lower after that. And we've also seen Tesla. Elon Musk has been selling his Tesla stock, which has put negative pressures on Tesla as well over recent days. So yeah, we've had a lot of markets extremely volatile. Tech has not been great. Meta, remember the day before, Facebook/Meta, Facebook, Instagram, Meta, posted stellar numbers, which helped the rebound yesterday. But then we had previous to that this week, we had Google, which were disappointing. So tech hasn't performed particularly well in here, but the market's still holding in. We're holding on to gains from yesterday on the equity indices, nevertheless. So Germany won't block a possible oil embargo by the European Union against Russia. So that could see the country phase in an end to purchases from Russia. So that's obviously can be impacting markets in here. The dollar has continued strong, but has a bit of a pause in here over the past 12 hours or so overnight. So and China has also announced stimulus measures in here as well, which revive sentiment towards the Chinese yuan and other emerging market currencies in here. So US stock futures are down overnight because of the negativity coming through from Amazon and Apple. And they're covering it as well here. US stock futures extend losses on tech slump. Okay, Apple, Amazon misses cap worst month for Nasdaq 100 since 2008. And it's for the longest run of monthly gains since early 2018. So, we're still looking at the moment. And if we look at European bourses are actually up because they didn't catch all of the rally. They were closed before we had all of the rally that we saw from the tech sector and the US markets after the European averages were closed. So Europe was actually up. But if we look at the US having had a stellar day yesterday in here, So yeah, we're up 1.8%. Nasdaq was, I think, just under, was certainly over 3% higher yesterday at the close. But then the futures not updating. But never, futures are significantly, well, not significantly down. They're not hugely down this morning. Again, this is not populating in here. But if we look at stocks in this, S&P's down about just under 1%, Nasdaq's just over 1%, Dow's around just under 0.5%. As I'm looking at the moment off the screen. What else do we have in here? Wall Street ends sharply higher, lifted by Meta, initially by Apple, or hopes on Apple really more than anything else. And we also had Qualcomm. So, during this day session, this is just stepping back to where we ended yesterday. And the dollar pauses. And stocks in set for the worst month in 2 years going into, remember, it's a monthly close. Just a note on that, is monthly close in here. That can also wobble markets. We can have some funny things go on at month end. Just with rebalancing and that kind of stuff. So, and that can just come from nowhere. So don't be surprised to see some choppy moves in various markets today. Earnings tech rally lift European stocks at end of choppy April. There's nothing really I saw of anything of note coming through on forex live in this morning. But again, look about the Russian gas payments in here. EU struggling about the gas payments in here today. And just a quick nod to the, this is not changing really. Nailed on for 50 basis points, and at the June meeting now. Increasingly likely for a much bigger hike in here as well. Let's go look at some charts. So I'll start off on just a quick nod actually to the bond market. So the bonds in here have dipped back lower in here. So as we've had that we did get a big risk off move, which saw bonds rebounded here, but with the Fed staying hawkish, we're drifting back to lower rates in here. Lower prices, higher rates again in here. Which is obviously not good for stocks. So you can see in here, stocks in here we're lower from yesterday. From yesterday's close, we did get not yesterday's. This is not the cash market close. This is like the end of day close in the S&P. So we did pull back from the highs, and you actually went exactly matched the high up here. I think we'll find. So we've got the high up here on my chart. So 4303.5, and we went to 4303.5 exactly. We matched this impulse high from Tuesday's big sell-off, the impulse high at 4303.5. We matched that yesterday and then failed. That's going to be a big level going forward, but we've got some way to go before we go and challenge that. Let's go take a look. I'm going to zoom out here onto a 1 hour chart. So here's the strong recovery yesterday. There's that sell-off there. That sell-off there is the data for when we got the earnings numbers come out. So obviously certainly negative. I'd still be just clinging to, it's a real tricky one. I'd be clinging to an upside bias whilst we're above that little swing low. The swing low from overnight is down at 42.35.5 on the S&P. Whilst above there, I think we can stay positive. If we cut through there, then it's going to attack this trend line and maybe lower. So I think 42.35.5 is going to be pivotal today. If we can hold that into the cash market open, I think maybe back up to this little mini high here, then maybe back to these are the obviously important highs. So the overnight high is 42.79.75. So through 42.80, it looks a lot more bullish. Down through 42.35.5, it looks more negative, and that 43.03.5, the high here from Tuesday and yesterday, are going to be bigger picture critical. I'm just going to skip back because I just realized we didn't really run through the calendar. So that was yesterday. Going into the day, we've most of the big tech's done now. So we've already had ExxonMobil and Chevron this morning, in the green on revenue, in the red on EPS. And what do we have later today in here? Actually, it's not AbbVie, AstraZeneca beating. So generally beating in here, but not positively impacting at the moment the markets. Let's have a look at in here the data we've had. So we've had German GDP slightly beat estimates in here this morning. And Eurozone GDP missing slightly on the quarter-on-quarter. We did get the CPI, the core CPI data, above the year-on-year number was in line. The core CPI core data though beating expectations, so that's a bit of a worry in here going forward. Core PCE today, that's in about 50 minutes. 48 minutes at the moment. So PCE, remember PCE personal consumption expenditure data. This is what the Fed tells us that they watch and they think is one of the best measures of inflation. So we'll certainly be watching the PCE data. We also have data for GDP, month-on-month GDP for February, but it's a little bit backward looking, really. February, remember in February, the Ukrainian war hadn't even started from that data. So it's a little bit, early February anyway. We're a little bit backward looking on that data. So GDP, not so important. I think the PCE data is what we're going to be watching this evening. Right, back to the chart. So we've kind of gone through there. Those are my two, almost the overnight high and low are going to be pivotal. If we break below this overnight low in here, it does look vulnerable again. Let's go look at the NASDAQ, kind of similar. So NASDAQ, destroyed on Tuesday. Decent rebound Wednesday, really good rebound yesterday, and then gave a lot of it back up again. Trying to recover in here though this morning, okay? But we did give a lot of yesterday's recovery back after hours because of Apple and Amazon. Market trying to recover in here today. Again, stepping in. It's on the 15-minute. I'm going to flip it to the 1 hour. And here, most of this is now redundant, to be quite honest. We went right up. Actually, look here. We did go right up to the 50% retracement of the sell-off of this week. Actually, sorry to me, not this week, from last week. So the setup from last week, we went right to the 50% and fouled there at the 50%, just below the swing high there. But again, look, we're kind of holding in this tentative trend line, strong through this low and this low in here. So I think that trend line is important. Get rid of this one here. It's drawn off here. We pierce it here and come back above. We defend it here last night, but we're back challenging it now. So if I just step in a little bit, I'm going to go back into a 15-minute. Yeah, I mean, you've got this spike in here from overnight. That's all the way down at 13,117 3/4. I think this kind of area, but it's spiked there and rebounded quickly. I think this area here is going to be important around 13,240. It needs to hold there. Obviously below this low and below the trend line would be vulnerable. So you might look at 13,260 as important. If we take 13,260, reverse the trend line. And then you've got these kind of lows over here from overnight around 213, 237. So those would be the two levels on the downside. On the top side, you've got kind of these two counter trend lines. This is on the 15-minute chart. You've got the one off the very top through like the overnight. Just send that out. And then we've got this more accelerated one. Now, if you want to be long, you'd be buying up through one of these. You've got the more accelerated one that just comes through from just the overnight activity in here, or this morning's activity comes through there. So, that above there is going to be like through 13,315. The higher trend line is going to be like up through something like 13,355. Those would be potential trigger points on the upside. And we've already covered the downside trigger points. Let's go take a look at the commodity markets. Start off with oil. Daily first. Continuing to push higher because of what, the fundamental events we've been speaking about potentially in here. And also if we go in here, look, so higher highs, higher lows. We reversed the trend line. We took out this peak in here yesterday. I think you were dipping at the moment. It's a 1 hour chart. Dipping at the moment, stepping into the 15. Yeah, it's only it's hardly a dip at all. Probably buying into this dip in here at the moment because we're not particularly, if we go back to the daily, we're not particularly overextended this morning, right? We've got, we're only up, a couple of bucks, not even $2 higher. So it's going to easily go and challenge that high there. That high from the 18th of April comes in at 109.20. So we could have a test of that today. So you almost, I think it's setting up for a buy there already on oil. And gold in here has now reversed this down move. We did break out the bottom of the range to reverse that. Really strong day today as the dollar takes a pause. Go back to the dollar index. The dollar's down back lower in here today. So most currencies rebounding against the dollar, just taking a pause. And then if we zoom in here on gold, I'm going to go in first of all to the 1 hour chart. So you can see we reversed that downtrend line. This from the whole sell-off. Reversed that yesterday. Get rid of these old ones in here. Get rid of that as well. And now we've got this kind of uptrend in place. The only concern I would have in here for gold is, it's extended. It's quite extended for today. Look, we're way in overbought territory. It is trying to correct a little bit, but it's not really coming back lower. high level consolidation. It could go again, but if we step back to the daily chart on gold, it's a big day already, right? It's up from sub 1900, 1895 really. So it's up $25 already. So, you know, look at these days. What are the big days in here for this is like a really big day for gold. High low there is like $35. So you may have another $10 to the upside, you know, but that would be a really big day for gold. So potentially you got one more move on gold, but you know, it is very overbought. You know, it might be, it's difficult to say. I'm not saying sell it, but it's difficult to buy it. I think I'd be bullish, but well, I am bullish, but I think you have to be very cautious, you know, and don't look for too much. So, which means you need a tight stop, and there's no obvious stop place in here. You know, stepping into the 15, it's probably easy, a bit easier. You know, maybe below this impulse low, below 1911 in here. You know, so long here, stop below 1911. So you'd be looking at maybe a $12 upside target though, really, because that's a, you know, $6 stop. You know, you stop below here. You know, a higher stop around 1913 and a half. It's a tighter stop, $4 stop, but then you're looking for $8 on the upside on a 2-to-1 ratio. It's not, you know, it's you're pushing the limits on how much this is going to move. So maybe the move's already done on gold. All right, guys, I think I'm going to wrap it up there. I'm going to wish you all a great trading day. I'm going to wish you all a great weekend as well. Stay safe. I'll be back with you with another Bull versus Bear webinar on Monday. Take care. Bye.